All right. Welcome, everybody. Good afternoon, good evening, or good morning, depending on where you're joining us from. And welcome to the AI Circle brought to you by the iFlip YouTube channel. I am not Lee Gearhart, your usual host for this show. I am your host for tonight, temporarily subbing in. I'm Aaron Yoon, in case you don't already know me. Lee is at a conference and wasn't able to make it tonight. So rather than reschedule and cause all kinds of disruption, I decided to jump in here and sub in for Lee. Of course, we are joined by none other than our esteemed Chief Investment Officer, Kelly Korshak, who should be much bigger on the screen. There he
Oh
is.
my gosh. Thank you
Welcome,
for the
Kelly.
thank you, Aaron, for the adjectives. Esteemed, I love it.
Yes,
Hello,
yes.
everyone.
So, hello everyone. Hello, Jim from Mexico, joining us from Mexico. Awesome, awesome. Love that we're international from the get. Okay, now, before we're able to do any of the fun stuff, I'm sure you have a ton of questions. We must go through the disclosure. So, please bear with me for a moment as I read this. Disclaimer: iFlip Investor Incorporated and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip portfolios that you select are suitable for your investment profile before trading in a live brokerage account. That's always a mouthful, always a mouthful. So let me get that out of the way here and have Kelly come back on the screen. Kelly, let me bring your screen back up. And just to give everybody, let me just go through a brief agenda because I know Lee does this because we're getting a lot of new people these days. Let me just go through the brief agenda here. We're going to go through the market updates with Kelly. He's going to talk about the relevant moves that the market has made, and as opposed to our AI buying or selling or holding assets in your smartfolios. Then, of course, we're going to get into the QA session, the section of the show where you're able to just type in the chat, type in the YouTube chat, any questions that you may have for us. And the best question is going to win a Amazon gift card as a prize, and we'll get into the details of that later. So for now, let's just go. I'm going to turn the mic over to Kelly. Let me bring him back up here and bring this back up.
Thank you. That's always a good template for me to work with, to go over the markets with when you have something to see.
Yes, of course.
All right, let's see if I can make that a little bigger and kind of fill the screen, at least the way it looks to me. All right. Thank you, Aaron. Hello, everybody. Happy Wednesday, the 24th. The next AI Circle will obviously be in May. Let's kind of dig right in until we get to the questions. So I'm going to go over the markets. Well, as you're looking at right now, a picture of the Dow Jones Industrial. On the last AI Circle, we were kind of looking for at least a small correction. We definitely found it. And we've had our move down. We've actually moved down from the highs around the last AI Circle. We were just off the highs. And we have finally had something that looks along like a 10% correction. Or sorry, folks. Make that a 6% correction. But let's put everything in context. I'm going to bring up a year-to-date chart of the Dow Jones Industrial Average, which means that this part over here on the left part of the screen, if you could see my mouse, is literally the first price of the year. If you look closely, where this line is, the horizontal line, if you can see it, the reason we have bounced here is this was unchanged on the year. This area here. If we went lower than this, we're down negative in 2024. So when I see patterns like this, where they're myopic indices, in other words, there's only 30 stocks in the Dow Jones Industrial, it is telling me what's going on is people are buying Dow Jones futures and they're selling stocks because they know the future should bounce on even on the year, given the S&P was still up 5.4% at these same levels. I'll show you a chart of that next. But what's critical here is this is a very common strategy on Wall Street, where if you feel the index is at a critical spot, you can buy the index and then sell the stocks, and you lock in an arbitrage because you know the index will be stronger than the stocks. So all you have to do is sell, say, the first 7 of the Dow stocks and buy the index, and you have a hedge where you're very likely going to make money. This was literally trying to buy a bounce off of break even on the year. Lower than this, the market goes much lower, probably down to the 3630 level on the Dow Jones, and that would be another 5% correction for a total of about 10%, and put us down about 5.5% on the year. That didn't happen. We had our little bounce. Today, the market was trying to bounce, but it didn't. It closed just down $50. So this is what's going on here. We are in the middle of a baby correction. Now let's go to the S&P real quick, because that's what matters. Same kind of thing. However, the S&P on a year to date, if we're seeing this, the S&P at its lowest level here was still up about 5.4%. This distance here, if you can see it, is about 5.4% to a break even on the year. But that wasn't the reason that it was bought. It was the Dow that actually bought the market. If we look at the NASDAQ actually at years to date, if we just looked at the NASDAQ top 100, we were getting close to being up only 3% on the year. So again, we're in this huge bull rally. Everybody's talking about the market rally, and the pundits, talking heads, are saying, is this going to continue? And of course, they cheer it on. Of course, it's going to continue. They're making new expectations for new highs, et cetera, et cetera. But I mean, we came within a sliver of going negative on the year. So that tells me that the cheerleaders are performing better than the football players. So we have a little bounce, and I will tell you that tomorrow will be critical. Why? Well, we do have earnings coming out. Earnings generally can be good, but if this market can move a little bit higher from here in the S&P, there's a good chance that we can kind of get back to the old highs. So even though there's a weakening of the market, this is still a market where people will try to buy the dips. This is the first larger dip that people had a chance to buy. But there's one problem. Let's go to the interest rate market. Here is the 10-year note. It is something we have predicted for a while. We're not doing year to date anymore. This is just moving down. We moved in this large move lower. We are now running at 4.65% on the 10-year note. I'll probably go out on a small limb. There will be no interest rate cuts in 2024. And I'll repeat that. There will be no interest rate cuts in 2024. We're not in an economy that makes any sense to cut rates. We had higher than expected CPI and PPI, CPI in the last reading, and that showed that inflation again is coming back. It is not completely tamed, and we had a big uptick. And that's one of the things that caused this day. Remember, it was about 2 weeks ago. The CPI comes out on a Wednesday, and we moved way down in the market. So we are at higher interest rates. In the stock market with higher interest rates is not as competitive against the bond market when the bond market's yielding a safer 4.65%. So if this bond market resumes a trend lower and goes towards these lows, you will see a more significant sell-off in the S&P 500, probably another 10% from where we are currently, which would put us down approximately 5% on the year. So I can't tell you what will happen here, but my instinct is to follow the trend. And in this particular case, the trend is down. More money is in the bond market than is in the stock market. And ultimately, this market that you see before you here is the front runner of the U.S. equity markets and actually worldwide equity markets. The Russell, just a brief note, the Russell did go down on the year. It's having its little bounce, but here it is. The Russell remains just a little negative on the year. So for all the strength in these stock markets, the broader market is definitely weakening. Breadth is definitely lower or worse. The market has bad breadth, literally. Other things have also important to note. The dollar has actually resumed a little rally. As you can see, it broke. We were in a range in here for quite a while, as you can see. And finally, we broke out of this range to the upside. We fell back a little today, and thus kind of the rally that we tried to see this morning, but it just never could take hold. The market wanted to kind of move higher, but they didn't really trade it today. It'll be witnessed by something I'll show you a little bit later in Tesla. Matter of fact, I'll show it to you now. Look at Tesla. We had a big $17 jump. This is called a dead cat bounce. Tesla, when you see a move like this, where it's making new lows all the time, and then you come up on a single day gap higher, and the range, if you can see, is this candle. If you look at it, you can see there's no range. All the volume was in that little red dot, but it moved much. It was higher and lower than that. It just stayed where it opened. This market will go lower. Just give it a week, and the next AI circle, we'll look at this and see if I'm right. Anybody welcome to, they can put their thoughts in the chat. Let's look at Apple. Well, Apple was in this range trying to hold 170. It had a bounce. That was also looked to me like dead cat, fell back, and now came back and made a new low, came back up to 170 area. It's still right around 169. We'll see if Apple can move higher. My guess is if it did, moved up to 175, 173, I'm a seller of Apple. And I really rarely ever say that. I'm just moving along the list. Let's take a look at one of the favorite darlings of stocks. I remember right around here a couple of weeks ago, the analysts it was around $8.90 a share. An analyst comes in and now saying 1,065 was his next higher bet. And the next thing that happened is it lost $100 a share. It is trying to come back, but it closed mostly on its lows today under heavy volume. I actually don't like NVIDIA anymore, and the Mag 7 to me are kind of long in the tooth. And that's one of the reasons why I don't feel very sanguine about the market at all. We've been looking for something like this. It is obviously very possible the market could rebound. Look, there's buyers out there. Cash is still there. But there's now fear too. And there's no doubt about interest rates. They are have gone much higher to 465. Mortgages are at 7.5. This is a market where I can't find optimism even in such a rally that we've had, that I can't just continue to be a cheerleader for it. I think it's also worthy to note that some other stocks have come off their highs a little bit, like even Amazon has, Microsoft has. Everybody wants to think it's a dip. The mentality of dip buying, once that is challenged in a deeper way, we will see the correction we expect. I do expect the markets to be down in the year at some point. Doesn't mean they'll end up there, but that's the way the volume seems to be moving now. It does seem to have a bit of an offer to it. But remember, tomorrow I think will be critical from a technical point of view. We'll see. If I go into some of the other stocks that we look at, I've already showed you NVIDIA. This is Microsoft. Let's get to the oil stocks real quick, because you know I like those. I've been a cheerleader of these. So let's look at Energy Transfer, a pipeline. Most of you out there know I've been a big follower of All Plains American and Energy Transfer. Why? Because of the big dividend, and also because of the price movement. As you can see, we are looking at a series of higher highs and higher lows. We had our first dip when the market came down, but the problem is interest rates really have nothing to do with the oil markets. This is a commodity. We do know that oil was at 87 a barrel. It's fallen back to about 81. And look what happened. We literally almost printed a new high yesterday, almost again today, and we have the dividend coming up. The last dividend here, as you can see, was in February 6th, which means we have March, April, and May 6th, we have another dividend, and that's going to pay you 31.5 cents to be in the stock for just 1 quarter. It's only charging you $50, almost $16 to own it, which means it's about 7% or more. So this thing bounced right back to where it needs to be, and it's long. We're definitely long that stock. And if we like All Plains American, same thing, brand new highs, 19, fell all the way back to 16 area, almost down to 17. Now we're back up at around 18.30, closer to the highs than we are the lows. Same thing, I do feel these stocks are moving higher. They're in the red oil portfolio, along with this, which is the energy index. The XLE represents a bunch of energy stocks, including some pipelines, not All Plains American and ET, but others like Halliburton and ExxonMobil. And as you can see, these are moving up. This is the red oil portfolio. These are the components, and we are just long. There's no AI that would want to get us out of these. Here's ExxonMobil. Well, heads up, folks, that's these prices here were new highs. So, and we came down with the market, but then look, the market comes right back, and it's come back more than the overall market has. It shows you the confidence people have in the energy sector, at least at this moment. So again, I don't recommend, but the oil sector has definitely been strong, which tends to tell me that we should kind of stay with stocks like that if we can, and collect the dividend to top it off. The banking stocks are kind of all over. Goldman made a new high here. I'm not in love with Goldman, but we do have signals that say we should own it, and we do inside of our some of our portfolios. Let's see. Let's kind of move over to, we should talk, there's no reason we should never talk about Bitcoin before I kind of sum it up. Let's look at the IBIT for now. Where is that? I'll scroll down and find it. Let's find, here it is, IBIT. All right, so as you all know, we have a BitFlip portfolio now. I'll explain it a little bit briefly, but again, because it's something worth noting and what we're trying to do here. We saw the big move up to 47 in this. This was when the Bitcoin was trading around 73,000 and made its new high. Then we've had this volatile streak. Then we came down, made a little new low, and then we bounced back up over it. This is anybody's guess. However, I can't make a technical decision in this kind of a market. But if my thinking is, I still believe that Bitcoin is a long-term buy and even a short-term buy for summer. I'm still going to hold with my target of $100,000 a coin somewhere in the summer. Let's just call it the middle of July, August, before we see something like that. There's a high probability I could be proven wrong, but I'd rather be on the long side than the short side of this market. And I'll wrap up with a small, before we answer questions, I'm going to wrap up quickly with what the BitFlip portfolio is. So here's the down and dirty of it. It is explained if you choose it. If you have $100 and you buy BitFlip, what is going to happen is you're going to actually buy $50 worth of BitFlip. And we will buy $50 more of BitFlip if we have a signal to say we should own it. That means at all times, we will always be long $50. If our $100 is in there, we will always be long half of the money in Bitcoin. The other half of the money will trade. And the reason we want to trade it is because of just this. There is no compelling reason now to have all your money invested in this concept right now. If this market were to make some new highs, and show us that it has momentum to the upside. And we know when this market moves up, it moves up. But it does the same thing on the downside, which means we want to have a system or concept that trades momentum and gets out fast when the momentum dries up. And so the 50% of the money in BitFlip will always be opportunistic, looking for times to get in, hold it for a few days or as long as it can move higher, and then get out if it doesn't. Conceptually, think of it as a kind of an option. Whereas if you put $100 in it, if Bitcoin goes to zero, you should have about $50. But if Bitcoin goes to 100,000, you will have at least 50% of your money will have gone up to 50 to 100,000, but the other half of your money would have traded its way higher, which means that there's a chance to capture more upside and restrict the downside. It is a very raw derivative product, something I would create in years past to be able to allow people to participate in something that has high volatility, where it actually could go much, much lower or much, much higher. The perfect play, of course, would be long volatility, a straddle, or even a strangle. But in this case, since we don't do options, we're just going to do it like this. So that is the BitFlip idea in the BitFlip portfolio. Currently, it is only long its core position of 50% Bitcoin, and it's waiting to put the other $50 to work, the other 50%. And with that, folks, it's amazing how fast 20 minutes go. Let's answer some questions. Aaron, help me out.
You got it, Kelly. I am going to ask you, though, because I think your camera...
it froze. Here's what I do.
Yeah, it froze. So.
I've learned to do this. Sorry, folks. And then I come back on, and generally, if it can, it'll resync in a second.
While you're doing that, I'll just start prepping some questions.
Sure.
We have the first question, I believe, is from Gloria Faustin. Mm-hmm. Hopefully I'm saying that correctly. Can iFlip allow us to get into liquidity pools? I might ask you, Gloria, if you're watching still, if you're still there, to clarify what you mean by liquidity pools. But that is our first question. Kelly, as soon as you get your camera situated, we can...
I've tried to turn it off and on. This happens, folks, generally when internet bandwidth, even though I have the fastest I can get, is slow in the area I live or broadcast from. So yeah. I've turned my video off for now, and when I turn it back on, sometimes it'll come back. Right now, it doesn't seem to be doing that. So, but it could happen at any tech. Otherwise, I have to get off, and then that would be more disruptive than not seeing the Brad Pitt of Phoenix.
Yes. I guess we were stuck with this ugly mug here for today. I guess they really wanted to
Younger
put me
mug.
on the spot because we don't have Lee to look at for today. But that's okay. What's important is that we hear your comments. So Gloria, for example, okay, so she's clarifying what she means by liquidity pool. Kelly, hope you can still see the screen.
I can see the screen. I see you.
Yeah. Okay, so in an automated market maker like AMM, DEX, Uniswap, or PancakeSwap, I think those are.
Look, sometimes if liquidity pools sometimes refers to dark pools. Right. Dark pools are things that are set up by brokerage firms like Goldman Sachs. So there's obviously, we know the New York Stock Exchange, we know the NASDAQ, we know the American Stock Exchange. We also know that there's other ones like IEX, the Pacific Stock Exchange, and by the way, as many as 28 others. However, also you could call them liquidity pools. Sometimes they're called dark pools, and they are run by companies like Morgan Stanley, Goldman Sachs, where their customers have so much liquidity of a certain kind of stock that they actually list it as a place to be able to buy or sell your stock. So where these things come in handy is if you are short-term trading or you have large quantities to buy or sell, and you are going to a Citadel or you're going to a Virtu which are market making companies, the Citadels, the Virtus, the companies like that, what they do is they'll say, okay, you want to buy, 100,000 shares of IBM or Microsoft. Well, you can go to the New York Stock Exchange and do it, but hold on. There's people at Goldman Sachs that have many more shares than that, and they put their shares up for offer as well, which means there's a chance you could be buying your stocks from the best place, and that might be Goldman Sachs. It might be Morgan Stanley and not the New York Stock Exchange or the NASDAQ. So if you're referring to liquidity pool, I kind of think of that as a dark pool or a private pool offered inside of banks for where they also have the same amount or large stockpiles of their clients' stocks that are up for sale, and they put them up for sale on their own board, and they allow market makers to come in and buy them or sell them there. So it creates extra liquidity beyond what the New York Stock Exchange has. By the way, Flip does not participate in that. Flip makes no money in the flow. We are not selling order flow. Mm-hmm. If I was selling order flow, we would be at Goldman Sachs, and I would have relationships with the liquidity vendors like Virtu, as I mentioned, and or Citadel. And at one time we thought about it, but we decided against that for the best interest of our customers, that we're not trying to make money by giving you bad fills. So one of the things I think a lot of people have noticed, if you go to a Robinhood, don't think your fills are going to be any good. May be free. We're free too. But we stick to the NYSE and the NASDAQ when we place our orders. So right. Just a heads up, everybody.
Yes, exactly. You're pretty much at the bottom of the barrel when it comes to the. I think of it as like waiting in line to get into like the most posh, coolest new club. If you're trading off of Robinhood, you're at like the back of the line, and plenty of people are going to be cutting in front of you, and you're just going to have to, take your chances.
That's a pretty decent metaphor.
Okay, so let's see. The next question we have is from Teresa Rivers, who's like, what? No interest rate cuts this year. What about the election? Which is an interesting point. Usually rate cuts make the current administration more popular. So Kelly, what do you have to say about this?
Again, I get that, but here's the thing. First of all, even though nowadays we recognize that everything sadly is political, there was a time, and it is still supposed to be this way, that the Federal Reserve is supposed to be agnostic. It doesn't care. It is not political. But let's face it, folks. We all know better. Everything is politics now. Things that shouldn't be politics are. And that honestly makes, for someone that grew up in my time, leaves a bad taste in my mouth. It tells me that things very much have a lot to do with the way people vote politically or the way they think in terms of society. Jay Powell is supposed to be apolitical. In other words, he shouldn't have a stake in it. But Jay Powell is bound to two things. One, because he's the head of the chairman of the Federal Reserve, he has his mandate. His mandate is to make sure there's to reduce inflation to 2%. That's number one. And the second one is to remain at full employment, seek full employment. Well, we are already at full employment, but inflation is not at 2%. It's at 3%. Yes, it was at 7%. The prices that we see have already inflated. So even if inflation goes to 2%, the bottom line is the prices are still going to remain higher because that's now embedded. Inflation can go to literally 0, but the prices we pay for Coca-Cola and everything else are still going to go up, still stay here. They're not going lower. It will take years for that to occur. But right now, there is no reason on earth, especially with that last CPI number, to say that we should cut rates. If anything, I would think you would raise rates to manage that. So even though it's a political year, he should be torn between the quandary of, well, if I want to maintain price control, I actually should raise rates. But last year, they were promising to cut 3-4 times. There was some pundits out there thinking there was going to be 7 interest rate cuts. That never occurred. So what we have now is my thinking is there will be no interest rate cuts. The Federal Reserve is bound, hopefully, not by politics, but by policy. And if he maintains policy, if anything, he should raise rates at least 0.25%. That's my view. Mm-hmm. And he should not try to help the current administration by giving an interest rate cut so that they can take a victory lap. What he should do is stay out of it and follow his mandate. That doesn't mean he will, but I suspect that he would have to single-handedly override the rest of the Federal Reserve members. And right now, I think more of them are on the side of leave things pat or raise. So we will see. Nothing I can do politically, but that's my bet.
Yeah, I feel like
how that plays out.
Right. I feel like we have a very short-term type of memory nowadays, because I feel like it was the previous administration, the Trump administration, where we really felt like for the first time a president be able to kind of bully the Fed. I don't remember that being really the case. Even though there's a lot of bark, there's usually no bite to it, and Trump was the first one in a long time, at least in my lifetime, that we saw that it actually had some bite to it. And so now we think that's normal.
Yeah, I think you're right, Aaron. I think it's kind of this. It's like there was a lot of rhetoric, but no reform.
Right. And so, okay. So hopefully, Teresa, that answers your question. We do have another question from Gloria. This is a 2-part question, but I think it's really the one thing. And I can send you a link to the video on this, Gloria. Can you please show us how to trade on iFlip, followed up by, would the AI trade for us in terms of getting in and out on time, or would we need to do that ourselves? So the Smartfolio, I can take this one, Kelly, you can take a break. The Smartfolio is designed to work on your behalf. You can watch it, sure, but it's but it's for you to look at, not for you to make decisions on. The AI will buy, sell, or hold stocks that are in the Smartfolio, so the blue ones in the app, whether you're on mobile or PC or desktop, the blue ones are the AI traded Smartfolios. So those are going to be, if there's a red orange dot on it, it means you're in, and if it doesn't, it means it's not in. Each AI is managing each stock in the Smartfolio independently. So you might see some of the stocks in and some of the stocks out, and it's going to be mix and matched all the time, because that's how a hedge fund would operate. Typically, when you have a team of traders, they're each doing their own thing, doing their operating at their level of expertise, independent of each other. Whereas with other apps, it's just like, oh, you gave me money today, I'm going to buy tomorrow. I don't care what the market is doing. And I stalled for long enough that we're able to get Kelly back on the camera. Yay, that's awesome.
Good stall.
Okay, so hopefully that answers your question, Gloria. Teresa chiming in to help us out there. The AI does everything. You don't have to do anything. That's how come I love investing with iFlip. Well, we love you, Teresa, for saying that. We also have another comment. Shout out to Jim Garrigas, who says, I am finally in the black since I stopped trading on my own and switched to relying on the AI to make all my trades. Congratulations on finally being in the black. We love you too, Jim. Okay, we do have a couple of more questions, and then we'll wrap with the best one, which will be our prize winner. Debbie McKinney asks, would you explain the LT volatility and straddle strategy referring to Bitcoin? So I think she wants more insight into the BitFlip.
I'll go as brief as I can. We're not employing an option strategy, but if you want to be long volatility, which is essentially what Bitcoin products or most cryptocurrency products are, what you do is you find you look at the price. Right now, the price of Bitcoin is around 66,000, give or take, and you would buy, say, a 60. You would buy a what are we? Is this April? I might buy a third week of May call, or sorry, sell a third week of May call for at 65,000, and I would also sell the same 65,000 May put. So what's happening is, sorry, folks, let me push back on that. I'm going to buy both, not sell both. Ooh, long volatility, sorry. By buying both, that's called a straddle. It's like a V. The bottom of the V, if you think of the V, the bottom part here is the strike price. But I want to be long volatility if it goes up or down because I don't know which way it's going. So I would buy the same strike price of an option with generally the same duration of the product I want. If it's a strangle, I'm just buying different strike prices. So I might buy a 70,000 call and a 60,000 put right in the middle, right? If it's about 66,000, I buy both. The market goes down, one will go up, the other one will go down, but they won't go down symmetrically. And therefore you have a chance to make a profit just because the market moved big time over that period that you owned it. And I can't think of a month where Bitcoin really didn't move a lot, where you have at least an opportunity on both sides within a given month. And we saw it here when I just look at, if I go to this, crypto, Bitcoin, if you can see it, I mean, this is where you kind of want to literally be long volatility because it's moving between 73,000 area to basically 63,000 on the downside here. So anywhere in this area, you can count on the fact that it's probably going to stay in here. You want to be long vol, is what they would call it. And there's all kinds of sophisticated strategies if you know options to do that. What I'm doing at Flip is that most people really don't know how to do that. And we're going to kind of come at it in a different way to manage just the risk component of a market that we believe will go higher. The thing I was mentioning earlier is we have no opinion if it goes up or down, but we do know one thing, it's going to do both. And we should be able to capture a profit somewhere inside that volatility. If you're good enough and quick enough, you can do that.
Awesome. Thank you, Kelly. So let's now take a look at let's bring both of our cameras up there. Okay. And let's look at, I think this is, we're getting towards the end here. The next question is from Shirish Doom, who is asking, how is manual investing done on iFlip? I only see an option for the auto investing. Well, that's because we are primarily a done-for-you AI doing it on your behalf, like I was just saying before, type of software service. So we're going to show you that first. The manual trading is really to supplement stocks that maybe you're really interested in, you might believe in or something, and you want to buy and hold. But it's to supplement the AI. We're not primarily a manual trading company. Kelly, do you have anything to add?
Yeah, it's pretty easy, though. You'll see a little search box towards the upper right side. You just put the symbol in that you're interested in.
Yep.
And you click on it. It'll come up, and then it'll say buy, sell. So it's pretty easy to just buy stocks as well and hold them for yourself. Obviously, I wouldn't want a platform that says I can't do anything on my own. Right. I mean, periodically, we all want to do something on our own. Right. And that is the one thing that distinguishes us from an investment advisor. An investment advisor, you can't really do that at all. You're not, matter of fact, most of the time, if you have an investment advisor, you can't even trade anything in your account. You got to call him up and convince him that you want to do something, and they may or may not do it for you. Mm-hmm. That's why we like ourselves as an alternative And that's why it's called a self-directed platform. It's not directed by us. We just create the idea and you choose it. If we were directing the idea, we would be something called an RIA, a registered investment advisor, and we would have completely different licenses
Right.
with the SEC. So
Right.
totally different. I think I want to think if there's no other questions, I'm trying to get to the best question. Let's see. Oh boy, that was a.
We had a lot of comments today.
Yeah, we have more comments.
More comments than questions today.
The idea of understanding a dark pool or liquidity pools is something we don't really get involved in.
Right.
So I'm going to have to go with the person that asked the question about the BitFlip.
Yes.
Who was because they're. How do you think the long term?
I think this. Oh no, that was him thanking you.
Yeah, I'm trying to find the question that I thought. Got to give away.
I think it was Debbie who was asking about the strategy, but she was really asking about the option strategy, but she was referring to the BitFlip portfolio.
Yeah. With the. Ooh. Well, you know what? It's interesting. Yeah. What I'm noticing is most people this time made comments. Thank goodness most of them are salubrious.
Yes.
And not in the pejorative. I'm really digging that. But the questions, I think there really was only two that mattered. One was about how to create a portfolio. Sorry, how to take a look at the option side. I think long term. What was it? There was one I was answering on options, and the other one was on the BitFlip.
One on the screen.
Yeah. So whoever made the comment on the BitFlip and the way it worked, I think is the one I want to give the nod to. Sorry, folks, there was slim pickings today from questions. Yes. It was mostly comments. Hello to everybody, because I see a lot of.
No, it's nice to see positive comments, especially during a time when the market is like kind of correcting. We're off the highs and everything, and there's a lot of fear-based sentiment. It's nice to see that our viewers, our customers are still very, very positive and worry-free, which is good. Yeah. Mental health is important. Yeah, stress-free investing is important. I think this is the question that we were referring to when you were talking about and explaining the BitFlip strategy, Kelly.
Okay. Wow. Well, I guess there's only really. I felt like I was answering multiple questions, but it was really only two.
Yeah. Debbie insists it was her.
Okay. I'll go with. Let's go with Debbie.
Yes.
I'm gonna go with Debbie. Debbie, you got it.
Debbie, you are our big winner tonight. Debbie, yeah, take a bow if you're. We can't see you, but yeah, go for it. Yeah. So let me explain to you. If this is your first time, I feel like we had a bunch of first time viewers today. This is how the trivia thing works, okay? Or not trivia, the raffle prize gift card works. The prize is a $25 Amazon gift card that is awarded to whoever Kelly chooses as the best question. But that's not enough. It's not enough to be chosen. You also must qualify. What does that mean? It means that you must be an iFlip user, and you must be invested in at least one smartfolio. So hopefully, Debbie, you are invested in at least one. And how do you claim your winnings? Well, you email us either a screenshot of your account or your account number over to mailbag@iflipinvest.com, where we will just verify that you own at least one smartfolio, and then we'll email you a digital $25 Amazon gift card. And so today, Debbie confirms that let me get this out of there. Debbie confirms she is invested in a smartfolio. We're still going to ask you, Debbie, to to just email us at mailbag. The email is on your screen there. Just email us so we can go through the paperwork, check off all the boxes, and send you the gift card by the end of the week. Okay, and that'll do it for this week's AI Circle. This is the last one in May. No show next week. We will see you on the second week of May, which is going to be May 8th. Your usual host, Lee Gerhardt, will be back with you. So you don't have to see me anymore. And of course, you'll have Kelly alongside with you.
But I like you, Aaron.
Oh, you like me? Well, maybe we should do a different show with
Aaron.
With us. If there's a demand for that. You can, if you have, by the way, the email that I'm sending you that you see on the screen, you can email us all kinds of questions, comments, suggestions, anything related to our internet presence or YouTube social media presence can go right there. Treat it like a mailbag, and contact us. We read through every single comment and suggestion. So please.
By the way, Aaron, Debbie's good to go. I just looked her up. She's got more than one Smartfolio. So
perfect.
Debbie, you're good to go.
Will do.
Thank you, everyone.
Thank you. Thank you, everybody. Have a good night.
Next time, let's hope the market kind of stays in here and moves a little higher.
Yes.
I like higher, or goes way down and we get out. And
Bitcoin
so
100K.
cheaper, and Bitcoin at 100K. Later, everyone. All the very best.